Live from Singapore, this is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. A risk-off start to the trading week as tariff tensions flare up. Asian stocks falling along with US futures, with gold advancing as traders seek safety. China now accusing the US of violating their trade truce and promising measures to defend its own interests. That follows similar claims from President Trump, even as he expresses hope for a conversation with Xi Jinping. Also ahead, Ukrainian drones strike deep inside Russia while Moscow launches fresh attacks on Kyiv, escalating their conflict ahead of crucial peace talks. And the U.S. Defense Secretary tells the Shangri-La dialogue that Washington remains committed to countering China. We'll hear from Pete Hegseth, as well as military chiefs from India, Canada, and Sweden. And we're live at the IATA annual meeting in New Delhi, speaking live with Emirates President Tim Clark. Asian shares and U.S. futures under pressure this morning as trade and geopolitical tensions resurface, prompting investors to seek safe haven assets such as gold. China is accusing the U.S. of violating their recent trade truce and is vowing retaliation. Over the weekend, President Trump said he would be increasing tariffs on steel and aluminium in the latest twist in the trade wars. Meanwhile, investors are also grappling with Ukraine's audacious strikes on the air bases deep inside Russia. There is plenty to rake through. For more on all the market reaction, let's bring in Bloomberg MLive strategist Mary Nicola. So, Mary, it's kind of hard to keep track on things, not just geopolitically, but specifically when it comes to tariffs. You're hearing from last week that tariff ruling. Now the US and China can't seem to even agree whether they've been keeping to their trade agreement, and then doubling of metals tariffs. How problematic is all this going to be for Asian markets?
I think you nailed it when you said that it's hard to keep up, and that's exactly how traders and investors feel, is the fact that it is hard and it's changing so quickly. And so we're in an environment where it's very headline driven, and now we're seeing that equities are underperforming as a result, and that's likely going to continue to weigh on sentiment, and more specifically on the dollar. So what we're seeing is increased pressure on the dollar because policy uncertainty stemming from the United States is just going to increase the pressure on the dollar and lead investors to just unwind any sort of dollar positions and add to the bearish sentiment that is already in place, not only from tariff uncertainty, but also from fiscal policy uncertainty. So the dollar becomes the sort of weakest link, regardless of what we see. That's the trajectory. We have Morgan Stanley saying 9% down from here by the middle of next year. Is that your assessment? That's the extent in which we can see the drop of the dollar? Yeah, there's a lot of dollar bashing out there, and that's likely to persist because of the fact that there's obviously, with the trade talks and everything coming through, there's a lot of pressure on Asian currencies as well to appreciate. But there's also this fear about growth uncertainty and how the growth outlook looks for the United States. And even you have comments from Fed Waller, who mentioned this morning that there was concern about slowing growth and higher inflation. That's not a good recipe for the dollar. That's going to invite more dollar selling and people to look elsewhere. So that's why you're seeing a bid for the yen this morning. That's why you're seeing just dollar weakness across the board. Mary, is the bigger problem, though, potentially the cracks that are going to show up in the bond market? Because that seems to be what the JP Morgan chief, Jamie Dimon, is alluding to. Are we already seeing that? Is it going to be worse than the long end selling we saw last month? There's definitely a storm brewing there, and a large part of it does have to do with what's happening on the fiscal policy side. So as we know, the tax and spend bill is being debated in the Senate, and how that unwinds is going to be absolutely crucial. So bond vigilante authorities can sit there on the sidelines for now, but there's only so much they can put up with, and there's only so much that they will allow the governments to get away with. We've seen it in time and time again, whether it's with the UK, whether it's with Japan, where when your debt becomes so unsustainable, the markets will react. So depending on how the fiscal spending bill unfolds, and as of now, the way it looks, it doesn't look promising for the bond market, because the focus is a lot more on the tax cuts rather than the spending cuts.
To your point, I mean, Diamond's already saying, you know, the cracks will come, it's just he doesn't know when. Mary, thanks so much for helping us try to digest all these drivers in the markets, our MLife strategist, Mary and Nicola. Now, in terms of geopolitical tensions, we've also been keeping tabs on the conflict between Ukraine and Russia, and that's ratcheted up just as the two sides were set for a second round of peace talks in Istanbul. Ukraine staging a dramatic series of strikes across Russia, deploying drones hidden in trucks to hit strategic airfields and damaging more than 40 Russian aircraft. Around the same time, Russia also launched drone and missile attacks against Kyiv and killing at least 12 people. For more, let's bring in Bloomberg senior editor Bill Ferries first. So, Bill, we've been seeing Ukraine kind of striking deep in the heart of Russian territory. What does this tell us in terms of, you know, there's been a tactical shift? Is this potentially marking a turning point in the conflict?
Well, Ukraine's President Volodymyr Zelensky said that this particular strike took them more than 18 months of planning. And it involved very complex strike involving hiding drones in trucks that were all over Russia. The strikes hit bases in the Far East, bases near Moscow, and then even up near the border of Finland in northern Russia. So a complicated set of attacks. It's interesting that it comes just on the cusp of a second round of peace talks this morning, but the damage seems to be fairly severe. We know of more than 40 planes destroyed, including several of Russia's long-range strategic bombers. These are the planes that can carry both conventional and nuclear weapons. At the same time, Russia has had, over the last 10 days or so, 3 or 4 of its heaviest waves of drone attacks on Ukraine that have done quite a bit of damage too. So all of this coming on the cusp of peace talks in Turkey. It's hard to know at this point if those talks are more of a formality at this point, whether either side is really expecting much. We had talks in May that resulted in prisoner exchanges on both sides, so that's an important issue. But in terms of trying to actually get to a breakthrough, a ceasefire in this, it's hard to see that coming after the attacks we've seen from both sides over the last 48 hours or so.
So is your assessment that these talks ultimately would have been affected by the attacks?
Well, I think the attacks are certainly going to weigh on those discussions at all. Ukraine, of course, very much wants to show the U.S. administration, President Trump, that they're serious about a ceasefire. They said they're ready for an unconditional ceasefire. Russia, on the other hand, has not really shown what its requirements are, what its expectations are to get to that ceasefire. So there's a real focus on what exactly Russia will demand from these talks in Turkey to get to that next step.
Bill, what are we also seeing from potentially the U.S. side? I mean, obviously, they've been trying to ramp up pressure. The clock is ticking to an end to this. What sort of reactions have we been seeing to all this?
You're seeing a little more pressure from Republicans, particularly on the Senate side. Senators like Lindsey Graham of South Carolina, who say they have legislation that would ramp up sanctions on Russia immediately, and including additional sanctions or tariffs on China for supporting Russia's war in Ukraine. I think that is going to be sitting still until we get a clearer signal from Donald Trump that he wants Republicans to pass that bill. It's not clear how that would face in the House, where there's a lot more reticence about the Russia-Ukraine war in the House of Representatives. But there are efforts to try to put additional pressure on Russia to come to the table.
Bill, thank you so much. We'll have more with you on this and on our coverage of the Shangri-La dialogue later in the show. Meantime, the war in Ukraine and Russia's potential next moves were big issues at the Shangri-La Dialogue meeting in Singapore over the weekend. Insight anchor Haslinda Amin spoke to Sweden's defense minister about how European countries are preparing for a possible escalation.
We follow, of course, what Russia is doing very closely. And right now, their ground forces are bogged down in and around Ukraine. But rest assured, they have stepped up. There are 3 times as many Russian soldiers inside Ukraine now compared to when the full-scale war broke out. But right now, they don't really have the assets to pose a military threat to us. But once there is an arms twist or there is a peace deal, they're going to be moving their assets and capabilities closer to our vicinity, of course. We also take note that Russia has stepped up the defense industrial production quite severely, and they put their economy on a wartime footing. They are also learning lessons from the war in Ukraine. We see they get more savvy on electronic warfare. They're developing their long-range strike capabilities and so forth. So Russians are adapting, and our response to that is, of course, that they're investing into our own defense capabilities and investing into NATO as well, to make sure that NATO can deter and defend every inch of Allied territory.
What's the pace of acceleration? Because we heard from Denmark. Denmark says that Russia is building up a position that will enable it to attack.
Listen, I never seen the kind of sense of urgency in Europe as I'm seeing right now. I've been in this business for well over 2 decades, and what's been happening the last couple of months, I think, is really amazing. As you might know, the EU has enabled the member states to take decisions that we could ramp up defense investment with $800 billion. That's a very significant investment, and we have these new military capability targets as well that are forcing us to invest more into our own security. And it's really natural, and it's long overdue that Europe wakes up and takes a greater responsibility.
Still ahead this hour, more from our coverage of the Shangri-La Dialogue in Singapore as the US pushes allies to spend more on defense. We'll hear from India's Chief of Defense Staff, who admits to losing jets during the recent skirmish with Pakistan.
What is important is that not the jet being down, but why they were being down.
But up next, we head live to New Delhi, where aviation leaders are gathering to discuss risks to their businesses. From trade spats to geopolitical tensions, we speak with Tim Clark, the president of Emirates, the world's biggest operator of wide-body jets. But in the meantime, also in focus, the company New World. Of course, this is a developer that is in the spotlight after a payment delay, which pretty much took the finance community in Hong Kong by surprise. Its perpetual bonds dropping to record lows. We're also seeing the stock of New World Development down about 8%. Plenty more ahead. This is Bloomberg.
Tariff definitely brings some risk and uncertainty for the airline industry, but I think so far I see China consumer outbound is still strong. The young demographics still looking for new destinations in Southeast Asia.
For India, really, the opportunity is everywhere. This is already the 3rd largest domestic air travel market in the world. It's growing at 8 to 10% a year, yet it has a propensity to travel by air 1/5 that of China. So if it normalizes to China's level, it's going to be massively larger.
Some of our guests from the IATA annual general meeting in New Delhi sharing their insights on travel demand. Let's head back to the event now. Bloomberg's Guy Jonson is there and standing by with our next guest. Guy?
Everyone, thank you very much indeed. Yeah, welcome back to the IATA AGM here in New Delhi. As you say, we've got our next guest sat next to us. He, of course, is Sir Tim Clark. He is the president of Emirates. Tim, nice to see you.
Good morning.
Thank you very much indeed for the time, as ever. Let me put my economist hat on first of all. You see global demand. You see what happens with supply chains. You see a lot of things going on at the moment. Is there a major shift happening? Are you seeing anything discernible in your numbers? Is the consumer slowing down? Is there any evidence of a shift in terms of where demand is happening? Are you seeing any evidence on the tariff story? We'll dig into this more detail, but I'm just kind of wondering if all the uncertainty that people talk about is actually generating anything material in what you're seeing in your figures.
Absolutely not. On the 3 points that you mentioned, there is no sign on our network of anything of that ilk happening whatsoever. We're just entering to the summer peak season. Our flights are all booked full, in fact booked through till the winter. As far as the uncertainties, we're kind of used to all of this. I think the markets are so much more resilient now. They went through a difficult time during COVID, and that has strengthened their resolve to keep moving. I'm not alone in that. Every time I talk to other members of the community that we are all competing with each other, they say the same thing. It's so far so good. There have been some problem areas. We know about North America, Canada, to an extent the North Atlantic. But so long as there is a state of change, as we know that's going on at the moment, with regard to tariffs coming off, tariffs coming on, off, levels falling, levels increasing, I think people are just keeping their powder dry, waiting to see what's going to happen. But
that's not causing people to stop spending. They're still spending in the way that they were.
They are. They continue to do that at fare levels which are very healthy as far as we're concerned.
Right.
So we have a very good situation with the fuel price situation.
Does that allow you to lower prices? Does that allow you to, if there is uncertainty in the market, is fuel the compensating?
Our price points are set by the demand and what the demand will take. The extraordinary thing about post-COVID work, the elasticities equations and mathematics changed significantly. The price-sensitive discretionary income segments became much more robust, and we're prepared to pay more and travel more frequently. That's a high-class problem for us. So at this point in time, with our break-evens at the levels they are that we haven't seen before, the prices they are, we're making good money, and I think. Again, I'm not alone in this. The airline community is a profitable entity at the moment. How long that'll last, I don't know, Guy. But in the end, one thing is for sure. If there was a paradigm shift in demand patterns as a result of COVID, it was to the north, not south, as everybody thought it would be, particularly in the premium cabins, which are the strongest they've ever been for us.
Are you getting an inkling that you're about to see the manufacturers, the OEMs, the Boeings and the Airbuses and the engine manufacturers raising prices? Because they are being affected by tariffs at the moment. They are seeing that impact. Is that something that they're ultimately going to try and pass on to you?
Well, in the end, we'll have to have that conversation. I don't believe...
Do you expect to have that conversation?
I think it may happen, but they're not in a position at the moment to say exactly what is going to happen to their cost structures because they don't know what the supply chain effect is going to be. If you have 140% tariffs in one day and then it's down to 10% the next day, they've got to just take stock and take a medium to long-term view as to what their costs are going to do, and then have a conversation with us as to what that may be. As far as we're concerned at the moment, they can absorb that. They need to absorb that. Until it gets to a point where it's not absorbable, if I can use that word, and then we have that conversation. But it's too early to engage and say your price is going up 10%, your price is going up 5%, etc. Because as soon as things change positively, then we would expect those prices to come off. So you get a situation where the negotiation with these vendors, the OEMs or whatever, becomes difficult, complex, and a little bit timely, and in the end it's time wasting. So let's just sit tight, see what happens, see whether it stabilizes, and at that point, if it is as adverse as people think they may, personally I don't think that'll be the case, then we'll have the conversation.
Do you get a sense, talking of the OEMs, that the Trump administration is going to smooth the path for Boeing to get the aircraft that they've promised, the MAX 10 on the narrow-body fleet, the 777X, the aircraft you've ordered an awful lot of? Do you think there is a conversation that is happening between the White House, the FAA and Boeing to get this process moving a little bit more quickly?
I think there is a clear understanding in all those stakeholders that you mentioned that Boeing needs all the help it can get. There will be a kind of counterbalance to this deal. Boeing will be required to produce aircraft in the manner they always used to do. They are safe to operate, they are well produced, they have quality control throughout the whole process. And I know Kelly Ortberg is working really hard to try and get the production line at the shop floor level, with both him and Stephanie both engaged in Seattle. They're not in Chicago, watching this very closely. So part of the deal is make our aircraft, your aircraft, really good as they always used to be, and we will try and make it easier. I'm not saying we're going to cut corners. My own surmise of this is that it's in everybody's interest for these aeroplanes, you mentioned the MAX 10, the MAX 7, the 777, to come out of the door as quickly as possible, because essentially they're very, very good aeroplanes. The MAX 10 will be a superb extension of the 737. The 7 is a smaller version of that. And of course, with over 500 orders on the 777X, which are replacing the ER, 300ER, many of which are coming to the end of their lives, this is absolutely vital that Boeing get this job done well. So you do the right thing by us, and we'll try and make sure, this is probably the White House or the government of the United States, to make sure that things are done as well as they can be, given the pressures that the FAA is under.
We just saw a moment ago reports on what happened with the attacks, the Ukrainian attacks into Russia overnight. You fly into Moscow, you fly to Russia. We're seeing airports being closed. I think there's 4 airports around Moscow being closed on a regular basis at the moment. How are you managing that? Does the problem that generates make you think I can use that aircraft more profitably, more easily somewhere else? Are you rethinking what you're doing in terms of how you're accessing that market?
Well, this isn't the first time it's happened. It's been going on for 2 or 3 years.
It is getting more and more
This latest event was a little bit more worrying. We have very, very strong cast iron contingency operational plans with regard to the approaches into Russian both airspace and in the terminal area of Moscow. So if there's any sign of trouble, we're out. We just pull back. We have enough fuel to do it. Now, as things get a little bit more acute, if I can use that word, we'll be reviewing all of this. It's not a question of the opportunity cost on the Moscow operation or the St. Petersburg operation, because they're both very strong. The demand is very strong, and we have a 380 going daily into Moscow. So we'll just watch and see. I'm not going to say we're going to stop flying, or we'll be more measured about how we go about this, but we will never compromise safety of operation.
Just one final quick question. There's also a lot of concern about people flying into the United States at the moment, and it's not evidence-based, it's just kind of anecdotal. Do you expect that to become something that becomes a factor as well? Do you think the US market is becoming less welcoming, and as a result people are going to travel there less? Well,
if there's anything that will cause a blip in the demand patterns for the US, it could be that. But you know, once you impose a new set of conditions and protocols, there's a lot of noise around the initiation of that. But after that, it's settled down. People want to travel to the United States. They then take extra time to go through the protocols that the United States government is introducing. So, but the fact is, there are 330,000 students just out of India going into the US every year. And all of these will be affected by the change. However, if they pass muster as far as the Americans are concerned with regard to their requirements, they'll go anyway. So it's just a question of adjusting to the new processes and protocols. So noise at first, then it'll settle down.
So Tim, great to see you. Thanks very much indeed for stopping by to see us. We really appreciate it. So Tim Clark, the president of Emirates. Up next, we are going to be talking to the Turkish low-cost carrier Pegasus. Looking forward to that conversation. It's coming up in a few minutes' time. For now, from New Delhi, Averill, back to you.
Thanks, Guy. Good stuff. Bloomberg's Guy Jonson in New Delhi covering IATA's AGM and the World Air Transport Summit for us. Of course, just another check at the stock of New World after it missed and it delayed the interest payments on some bonds, really much highlighting this is a developer that's moving deeper into distress, seeing the stock down about 8% at the moment. Plenty more ahead. This is Bloomberg. Welcome back. You're watching Insight. Here's a quick look at where markets stand. There's a lot of risk off and a lot of search for safe havens. You're looking at dollar yen having moved below the 144 handle amid all this uncertainty. Gold has also been doing pretty well today. And amid all this, we've been hearing how China is accusing the U.S. of violating their recent trade deal, promising to take measures to defend its interests. And that's dimming the immediate prospect of a leadership call that President Trump is seeking. Let's bring in our China correspondent, Min Lo. So, Min, how likely is it that this call could happen this week, given how both the U.S. and Chinese side seem to think that the other has been reneging on the trade agreement?
Yes, well, the U.S. economic advisor Kevin Hassett had said the call could come as soon as this week. But on the flip side, from the Chinese side, we haven't heard any confirmation so far. But granted, when it comes to the Chinese side, usually these sort of announcements can oftentimes come very late, sometimes as late as the day before. So it's hard to tell. But bear in mind as well that President Trump previously had mentioned that he was expecting to speak to President Xi at the end of the week. That was the week after they had the Geneva trade talks. But that call hasn't happened. So how much weight we can put behind the words of Kevin Hassett, it still remains to be seen. But as you said, trade tension has been ratcheting up, especially because of a number of what China is calling unilateral discriminatory measures that the U.S. has been taking this week, including revoking the visas of Chinese students, expanding chip curbs now to not just those companies that have been sanctioned, but also the subsidiaries under them. That is being considered for now. And then there is also the curb on the sale of these chip design software to China. Not to mention over the weekend, there was the Shangri-La dialogue where you had Hexas really playing up this China threat, and China really up in arms about that, warning the U.S. about not playing with fire on Taiwan. So, and then, as you said, both sides trading accusations because the U.S. is saying the same thing of China, saying that they are also violating the terms of the Geneva Agreement. Trump didn't elaborate on how, but you have Jamie Sangria mentioning the slow pace of the rollback of some of these countermeasures, especially when it comes to the flow of critical minerals into the U.S. So given that souring sentiment, how willing is President Xi to pick up the call? That's a question that we don't have the answers to now.
Yeah, and even if we do see a call, there are all these other tensions, as you highlighted. We also got data out of China today, right? Or dropping over the weekend, I should say. What do the numbers tell us? How encouraging are some of these signs?
Yeah, we did see the official PMI numbers drop over the weekend, looking like we are seeing a bit of a relief here thanks to that trade truce. So if you look at the manufacturing PMI coming in at 49.5, that was in line with expectations. It was better than the previous month of 49, but still below that 50 threshold between contraction and expansion. So that suggests that there is still some lingering uncertainty, especially given the accusations from both sides now. But we did see, if you look at the sub-indexes, there big bounce on the new export orders, also production output expanding to 50.7 as well. That shows you that perhaps these U.S. importers are really stockpiling some of these products there during these 2-3 months of the trade truce. So we could see that tailwind coming in the next couple of months as well. Plus, we have the PBOC cutting rates in May that provided some support for the economy. Non-manufacturing PMI, though, slightly undershot expectations, coming in at 50.3. We got a little bit of a lift on the services PMI because of the holidays. Some of the tourism-related sectors, accommodation, catering, benefited from that. But overall, looking actually quite robust, which would give the government a little bit of breathing room while they observe and monitor and decide whether more stimulus is needed come July when the Politburo meets again.
Min, thank you so much. Bloomberg's China correspondent Min Lo for us there. And joining us now is Hebe Chen, market analyst at Vantage Markets, for some analysis on, whether all these developments move the needle. Just like your thoughts first, Hebe, on Chinese assets, because we've already been seeing how investors sort of lacked conviction in them the past couple of weeks. So in that same vein, now that we're seeing perhaps a further souring of tensions, are you still expecting markets to see a big drop?
Well, honestly, I think that we are not surprised that the back and forth for the negotiation in between the U.S. China, because I think that we seems not unfamiliar if you're looking back into the journey back into 2017 to 2018. What I'm a little bit surprised is that I think that both sides now trying likely to play a game called escalate to de-escalate. And moving forward, the next step is whether or not the Trump will be, apart from the just increase the tariff number randomly to introduce new uncertainty layer. I think the uncertainty is what the market will be the worry the most, because if that's unknown to the market already, the market is not pricing there, and that will be the additional pressure for both assets, not just for the Chinese side, but also for the US stock market as well.
Hebe, as you were just hearing from Min, there are some encouraging signals when it comes to the Chinese economy, but we're still seeing the property overhang, more recently from the likes of New World, the Hong Kong developer. I mean, does this move the needle, you think, when it comes to the impetus for authorities and the stimulus they will need to push out?
Well, yes, I think that, yeah, we do have seen some encouraging signs, not just from this month. Actually, starting from last year, we have seen some of a tentative sort of recovering side, as that I think Mimi just mentioned about manufacturing. We do see a little bit of a stabilize for the inflation as well. But for example, the upcoming inflation data, we're only expecting another 0.1% of an increase month by month. So I think from my perspective, when I'm looking back into the past 2 years number coming from China, I think what my feeling is that you can probably safe to say that it's bottoming. The Chinese economy decline momentum has bottoming, but I'm just a bit hesitant to say that it's bottoming out. I think there's quite fine difference there. The next slide I would like to see is whether or not there's a strong recovery from the domestic demand, and also we're seeing the clear message for the trade and manufacturing. I think until that, we could potentially hold that the Chinese economy is bottoming out.
Hebe, you also believe that there's more upside to come for Asia currencies. How much of this is a dollar story, though? Because we're looking at these PMIs, right? And, you know, they're not terribly encouraging from parts of Asia.
Yeah. Well, the reason I'm positive on Asian currencies is based on one assumption plus one of the historical reference. My assumption is that directionally, we're going to see the Fed cut its rates, regardless of 1 time or 2 times. On the other side is that if you're looking back into 2017 and 18, when the US dollar dropping about 13%, we're seeing on average the Asian currency, including the Taiwan, the Singapore, the Malaysian currency jumping up roughly about 11%. But today, we are seeing that US dollar dropping about 8%, while the Asian currency only improved roughly about 4%. So I think that the room for the currency to move higher still pretty decent based on this assumption as well as a historical reference.
And I guess to your point, we have the likes of Morgan Stanley also expecting even further drop for the dollar from here until the middle of next year, 9% they think. But Hebe, talk to us also about when it comes to, you know, when you're looking across these asset classes, how concerning are these potential cracks in the bond market? Is that where, you know, the problem areas that the markets need to pay more attention to are?
Well, I think I will say it's extremely concerning. Extremely concerning is based on the near-term concern as well as the long-term. Then my most concern for the near-term is the disconnection in between the dollar and the yields, which suggests that will be a quite likely ramification is any emergency coming, that the effectiveness of any monetary policies will be highly discounted because this correlation in between of them is kind of damaged. For the longer term impact, I think that's quite a dangerous possibility is that we're often seeing the bond as a risk-free cost of capital, right? So now the market is clear saying that we want a higher risk premium. And that requirement will not only limit it in the bond market, it will flow into the equity market or any asset class. So ultimately, we're going to see a very high cost of capital for the economy growth. At some point of time, I think that will be the worst case, which I don't hope is happening, is that we were seeing the cost of growth for the global economy will be too high to afford. And I think that's worst case, but it's not unlikely given that what's happening in the bond market today.
These cracks that we are watching out for. Hebe, thanks so much for sharing your insights with us. Hebe Chen, market analyst at Vantage Markets. Now, China has lodged a protest over U.S. Defense Secretary Pete Hegseth's speech at the weekend to the Shangri-La dialogue here in Singapore. Hegseth criticized China during the Defense Forum for not sending a high-profile representative. He also played up the China threat to countries in the Asia-Pacific region.
We do not seek conflict with Communist China. We will not instigate nor seek to subjugate or humiliate. President Trump and the American people have an immense respect for the Chinese people and their civilization. But we will not be pushed out of this critical region. And we will not let our allies and partners be subordinated and intimidated.
Meanwhile, some of the closest U.S. allies, including Canada, are reassessing their reliance on Washington and looking to increase defense spending. Canadian Chief of Defense Staff General Jennie Carignan spoke to us at the Shangri-La dialogue, reaffirming Ottawa's close military ties with Washington, even after President Trump's repeated jabs, including his talk of making Canada the 51st U.S. state.
I collaborate very, very closely with my U.S. counterparts. Of course, it's a lot easier to do things together than on our own. So we are very much focused on the defense aspect of what we do.
You have to imagine that the military in the U.S. takes its direction from the president himself. And this is a president who has repeatedly said that, you know, Canada could be the 51st state of the U.S. Is that impacting relations and trust in any way?
Well, for sure, we are absolutely focused on defending our sovereignty and then exercising our rights as a sovereign nation. So from our perspective, this is what we continue to do. And the relationship is evolving over time, but from our perspective, we are, of course, as usual, focused on the defense of Canada, the defense in the Arctic, and absolutely open in doing this together with our neighbors. Like, we can't change our geography, so absolutely focused on getting this done together.
We know that when it comes to the Golden Dome project, it's going to be a 20-year project. It'll cost about $1 trillion. And President Trump has come out to say that Canada's involvement will cost it more than $60 billion. Is that a fair price tag from your perspective?
Well, in terms of numbers right now, we know what we are setting forward in terms of investments in NORAD modernization and in defending in the Arctic as well. So we have a lot of funding already committed to doing that over the next period of time.
Canadian Chief of the Defense Staff General Jennie Carignan speaking with Bloomberg's Haslinda Amin. Now, coming up, more from the Shangri-La dialogue, including reaction to the Indian military's admission of losing jets to Pakistan. This is Bloomberg.
What is important is that not the jet being down, but why they were being down.
We are increasing our defence capability in a historic way, but so many other countries are moving down that path as well. It's also why, you know, we are very much building our relationships within the region, but it's also why, in terms of the United States, we are keen to see a US which is focused on our region, and we're very keen to work with them.
Recently, we brought in €4 billion for an additional package. This is mainly to strengthen the Ukraine defense industry so that it's self-sustaining also for the future. So we are basically building a bridge from support nowadays into the future as well.
Senior defence officials from Australia and Germany speaking to us at the Shangri-La Dialogue in Singapore over the weekend. And at the forum, India's military confirmed it lost an unspecified number of fighter jets in last month's clashes with Pakistan. Chief of Defence Staff General Anil Chauhan also told us the conflict never came close to a nuclear war.
What is important is that not the jet being down, but why they were being down.
But a jet,
Why? Why? Yeah. Why they were. So the good part is that we are able to understand the tactical mistake which we made, remedy it, rectify it, and then implement it again after 2 days, and flew all our jets, again targeting at long range, which I said.
Pakistan claims 6 Indian jets were downed. Is it correct in that estimate?
Absolutely incorrect, and that is not information which I said is important. What is important is why they were down. That is more important for us. And what did we do after that? That's more important.
I guess the world is asking for clarity, because these are words that came from Pakistan, whether it was 6 or whether it was fewer. So just to get clarity, Indian jets were downed, but the number 6
As I said,
is not
numbers
inaccurate.
are not important. Why they were down, what mistakes were made, that are important.
What's the state of relations between Pakistan and India at this point in time?
We are back to normalization of relationship in the sense that we have an agreement. We can't call it ceasefire. Cessation of hostilities is there. And we are seeing that that on the borders, whatever forces had come into place, they go back. So it's hopefully it will remain like this. The state of a relationship depends exactly on how Pakistan will behave in future. What India has done is we have laid clear red lines, the limit of our tolerance against terror. So the state of relationship is purely dependent upon how Pakistan is behaved in future.
The world was watching developments really closely because both Pakistan and India are nuclear powers. What was the risk of a nuclear war erupting?
I think none whatsoever, because I personally feel that there's a lot of space between conduct of conventional operations and the nuclear threshold. And we have demonstrated it not once, now thrice. So it was during Uri, then it was your Pulwama, post-Pulwama, Balakot strikes, and now. And what I personally feel, one of the experiences from this particular conflict is not only in this escalation ladder, which we continued with Pakistan, in each of these ladders there are much more sub-ladders which can be exploited for settling out our issues without actually raising that nuclear bogey. That's too far-fetched.
That question was asked because the U.S., in fact, President Trump said that the U.S. managed to stop a possible nuclear war.
I can't comment upon that, but there was nothing like that between us and Pakistan. And our channels of communication with them were always open. And that's one way to control escalation. That I think was never on the cards.
Now, the Indian military's admission that its air force suffered losses to Pakistan came after weeks of refusing to do so. Bloomberg senior editor Bill Ferries is back with us, and also joining us from New Delhi is government reporter Sudhi Ranjan. Sudhi, let's get to you first. What has been the reaction in India to this admission from the military coming weeks after the event?
Well, to begin with, I mean, this just shows that, nobody knows the full extent of what actually happened in the war or in the conflict. And therefore, what it has meant is that the opposition is back again asking questions. They are likely to push the Prime Minister Narendra Modi a little more harder than they have been. They are going to ask questions. And as a result of which we are going to see, or we are seeing, that the carefully built narrative of India, coming unstuck. And that is a major political problem, or that could be a major political problem for the government, not only internally within the country, but externally as well.
Bill, let's bring you in. I mean, how closely is the world looking at these Indian jet losses, especially as it, potentially came against Chinese weaponry?
Yeah, there's been a lot of interest in that angle of it, although none of the reports are really confirmed. We've seen investors piling into some Chinese defense stocks on reports that these were Chinese jets that shot down potentially French-made Rafale jets. Now, there hasn't been a lot of clarity on what these losses have been. But anytime you have a conflict that showcases new weaponry, it does raise the prospects of sales for the companies involved. There's been a lot more interest in what the Chinese capabilities are since this took place.
Sudi, I wonder if we can bring you in here as well. I mean, is there a sense of whether India could eventually give us a better idea of what ultimately was lost in the conflict?
Well, I mean, that is how it should be. I mean, clarity, at least for the people of the country, should be there, and that would, allow a better assessment. If the government wants to claim victory as it is, and the facts need to come up. Why, I mean, and when that is going to come out, why and how that is going to come out is still not clear, because we've very clearly seen the government trying to control the narrative very, very, to the T, in fact, being very, very sensitive about what is written, what is reported. Now, after this, admission from the topmost general of the country, it is but fair that the government then comes out and says, with the conflict in the past, this is how the conflict unfolded, and these are the points that, these are the lessons learned from the conflict, and this is why we think India did much better than it is known. So that should follow. But given the political atmosphere in India, and as well as the diplomatic situation, we cannot be very sure about that.
Bill, when it comes to the narrative, I think what was glaringly obvious was how China's defense minister was not present at the forum this year. How is the defense community reading this after the weekend in terms of, was this a missed opportunity for Beijing?
Yeah, this is my third year helping cover Shangri-La, and one of the unique things about this conference is that you do have, in a very small, confined space of the hotel, senior military officials from all around the world meeting, gathering, having some impromptu side chats, and getting to confront each other as well in some of these plenaries and keynote speeches. That was missing this year. The U.S. came with a fairly high-level delegation, the Secretary of Defense, the head of the Indo-Pacific Command. The Chinese sent a much, much lower level of a delegation that really wasn't able to engage. So you had, at some level, you had a lot of questions about how much China wants to be in this kind of a forum and take part, and whether they are perhaps shying away from some of the more confrontational sessions.
Bill, thanks so much. Bill Ferries and Sudi Ranjan with their insights from the event over the weekend. Thank you for your analysis. Before we go, here's a look at tomorrow's show. We'll be coming to you live from the Nomura Investment Forum here in Singapore. We'll discuss trade risks with President Trump's former acting chief of staff, Mick Mulvaney, and Nomura Research chief economist, Richard Khoo. Former New Zealand Government Minister Stuart Nash also joining us as tougher immigration policies in the US spur a spike in golden visa applications. That's it for Insight.